The key story we've been following this morning, markets are selling off. Chinese investments in the U.S., technology exports to China also now under imminent threat. The Journal reporting this morning the administration may announce some additional barriers targeted at China's technology growth by the end of this week. Well, breaking down the continued escalation in this trade war with China, we're joined by James Pethokoukis, American Enterprise Institute scholar, and Mark Zandi, chief economist at Moody's Analytics. Mark, you know, we've had a parade of strategists and other economists who follow the market and say right now, given at least where we are in tariffs, or even where we may be in the not too distant future, as a percentage of the overall economy, it's still quite small. But we've all been searching, and I think the market is as well, for when is it no longer small and when does it start to make a real difference? Do you know?
Well, I think it's already making a difference. I think if all of the tariffs that are in train actually get implemented, and that's on about $100 billion worth of imports to the U.S., that'll shave about 0.1% off of GDP in the coming year. But if all of the tariffs that have been threatened by Trump are actually implemented, and that's $800 billion worth of imports, that'll shave about 0.5 point off of GDP. That's real growth, that's real profits, I think the stock market will have a hard time with. So yeah, it's already starting to add up.
You think we get there on that 0.5%? I mean, July 6th, we get a new round. Certainly the possibility of escalation seems to be fairly significant at this point, not just with China, but with Europe as well, and maybe even Mexico and Canada. Do you think we actually get to that point where 0.5% is shaved off GDP?
Well, I think the most likely scenario is that this is just chest thumping, and at the end of the day, once the stock market goes down a few percentage points, the president focuses on something else, and life goes on, no big deal. But having said that, clearly this war is escalating. Today's announcement by the administration is a good example of that. So I don't say that with any confidence. So I am growing more worried that we're going to go down the rabbit hole here, and that the economic pain and suffering is going to be much greater than I had thought.
Jimmy, Mark just laid out an interesting point that I've heard a number of times here on the floor of the stock exchange, which is the president wants to see the stock market go up. I mean, he bragged about it when it was going up every day since the election. And now that we're in for a little bit of pain, how high is his threshold, do you think, when it comes to some of these trade actions?
Well, I think if you look at his great love of a higher stock market, and if you look at whether it's the trade deal with South Korea or the recent deal with North Korea, it doesn't seem like this is a president who's willing to go through this sort of sustained pain to reach his objectives. Now, and I think the smart money so far has been all this is going to be about negotiating, and eventually the Chinese will agree to buy more U.S. products, somewhat smaller trade deficit, at least with China, and then we move on. But, but not everybody in the administration believes that. And if we're now following the Navarro path, if the president sort of now accepts that this needs to be a sustained sort of especially against China, kind of a cold war against China, then this isn't going away. And I think investors might want to begin to value these technology companies for a world in which you have two separate technological ecosystems, a Chinese one and American one, then both fighting for the European market. If that's where we're going, then it's a very different scenario than just this is kind of an art of the deal negotiation, and we'll be talking about something else by September.
Well, James, you seem to be pointing to something critics bring up a lot, which is that there is not a unifying theme here in terms of all these battles we're waging that is going to get us to some end result that we've already sort of established as what would be success. Do you agree? I mean, is it seemingly random in terms of where we're headed here?
No, listen, I think if we're going to define success by a metric, the president's favorite metric being the trade deficit, that's one thing. But again, if what we've decided, for instance, is to treat China. There's been the debate whether is China sort of a combo of the 1980s Japan and the 1980s Soviet Union, an economic and a military threat combined. If we're going to treat China basically like it's the old Soviet Union, in which we worried very much about technological transfer, then we're talking about a long-term, I think, suppressant on the market and these technology stocks. And there isn't an obvious end game. It's just going to go on and on and on.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.